Producer, price inflation due out tomorrow. It was the hotter than expected CPI that sank the markets on Tuesday as investors began to worry that the Fed won't cut interest rates as soon as they'd been hoping or betting. Join us now to talk about where inflation is, where it's been, and where it's going. Former Commerce Secretary and Kellogg CEO Carlos Gutierrez. He is co-founder and CEO of Empath and a CNBC contributor. And in your current position and with all your contacts in the business, Carlos, I'm interested in just anecdotally what you're hearing, because there's so many different components to inflation, and some seem to be going the right way, and other ones seem to be stubborn, I think. What are you hearing?
Well, top line is becoming a struggle, and I think that's sort of expected. You take up prices, it's going to take some time for consumers to get used to it. But I do hear the top line. That is the issue, and it's an important issue because what's happening is companies are sticking to their earnings targets. So if they had a 10 or 12% EPS growth, but their sales are growing at 1 or 2%, then they're just ramping up operating profit margins. Eventually, they're going to have to reset. They will have to pay for that. So that's the thing. We talked before about protect gross margins when you take pricing up. That's the first step. But now it's about EBIT and about EPS. And if you have to cut, then that's where you're going to cut from. And if you need to make earnings, no matter what, you're just narrowing the gap between gross and operating, and therefore you have less space to invest in marketing, to invest in brands. And so, it's a fast way to go from brands to a commodity status.
Carlos, we've heard, I think when Procter & Gamble was on it, the prices are, we're still seeing some increases, even though I don't know if input costs are increasing anymore. But now consumers might not be as amenable, just to say, okay, fine, I'm going to pay these prices. And I think there was a little pressure from that.
Yeah, I think that, one of the things that happened is we hadn't had inflation for a long time. Companies hadn't really taken a lot of increases. So there were some increases that were pretty dramatic, 10%, 15%. Now what I hear companies talking about potentially is let's establish a rhythm, perhaps an annual rhythm of 2%, of 3%, and then you don't have to get into, all of a sudden having to make up for several years in one price increase. And I think that has happened in some instances.
Did you see the shrinkflation speech? And I just wonder what was that? And if it ends inflation, it's whether you're getting less for the same price or getting the same amount for a higher price, it's still inflation. And I don't know who's, I guess the president doesn't think that it's his fault, or you wouldn't bring it up. If you thought it was your fault, you'd just blame it on price gouging, or, it's the company's fault.
Yeah, no, I think it's there's a misunderstanding, probably a confusion. But I think that sometimes when the White House speaks about inflation, it sounds like they're expecting prices to come back down. So inflation is declining, prices should decline. That's never going to happen. Prices are going to stay where they are because the costs are there. And yes, the rate of inflation is down, but prices are still going up. So, there's confusion and people throw out terms. And I think that's what drives some of the confusion and some of the false expectations. Prices are not coming down.
No.
Hopefully they'll get that.
How about the labor market, Carl? The last, with cable companies and fiber, it was always the last mile. So now we use that metaphor for talking about the last mile of inflation. I think it means from like 3.5 all the way back down to where we get to 2 again. If labor is tight, how do you ever accomplish that to solve the problem for the last mile?
Yeah, that's a great point, because there are still labor shortages. It's not easy to go out and hire the people you need to hire. Whether it be the labor participation rate being so low, But we need people. We need specific skills. And that is going to be a continued pressure on inflation, no question about it. So that hasn't really been fixed. I mean, we continue to see good wages. Wages are going up. Unemployment is low. But again, I worry about that labor participation number that is so low. But I do hear everyone complaining about, I can't find people, accountants or marketing or whatever it is.
Yeah, I saw some crazy, the other day, like 30, 40 years ago, the number of people a certain age, it was like 88% or something. And it's just a staggering number, how much lower it is right now, Carlos. I don't know what it means. So yeah. Do you think we get back? Do you think the Fed can orchestrate 2% again in the U.S. economy in the next year, 2 years? Will we do that?
Maybe in the next 2 or 3 years. I don't think it'll happen next year. As you say, the last mile is the toughest. I just don't, go from 3 to 2 is just, it sounds too easy. It's going to take some time. I just hope that the Fed moves a little bit early. If we move early and they do it with precision and they know what they're doing, we could have a soft landing still. If we move late, then I think we've blown it.